Alright, be honest with me. Have you ever gone to Costco for one or two things and end up leaving spending $100 or more than you were expecting to? You're going for, egg whites and coffee beans, and then you end up leaving with a new kayak, a new basketball net for your pool, and a 24-pack of cookies. And you're asking yourself afterward, how did this happen? This is called the Costco phenomenon. And it happens because Costco has a brilliant business plan, and we're going to talk about it. Welcome back to the channel. It's me, Adam. You're watching Steady Invest. I want to start off by saying I think Costco is an absolutely amazing company. They trade on the NASDAQ under the ticker symbol COST. The stock went public in 1982 for 88 cents. Today, it's trading for $375. You could have made 42,000% on your investment had you invested in 1982. In my opinion, they're one of the best risk-reward stocks out there because they're a very resilient business, but they also have a lot of growth ahead of them. And it's all because of their genius business plan. Think about it. Costco makes their money, and customers have a huge variety of super high quality products for cheap. So let's see if this stock is worth buying now or not. Before we do, smash that like button. It helps my videos get out there. As well, if you're new to the channel, hit that subscribe button and let's get started. Alright, let's take a look at the all-time chart first. As we can see, it IPO'd back in 1982, and as of today, you would have made 42,594% had you invested back then. It was trading in single digits up until 1997 or so. And like any stock, there's been turbulence along the way, but we see continued growth over the years. Since the recession in 2008, we've gone up 790%. In 5 years, we see the steady growth of 145%. Remember the market crash back in March? It was more so a correction for Costco. So while the S&P 500 dropped 34% from February to March, Costco dropped 14% for 1 week. And then it was choppy for a bit, but then ever since then, we're up a steady 31%. Remember, I believe Costco is one of the best risk to reward ratios out there. As well, as of today, they currently have a $165 billion market cap. And they also give out a dividend, even though it's not that much. It's been growing steadily since they started it back in 2004. Looking ahead, Morgan Stanley boosts Costco target to $400. And several hedge funds and institutions are also investing in Costco as well. Big money is flowing in. So let's get into the nitty-gritty. How does Costco make money? In order to shop at Costco, you need a membership, and this is how they make the bulk of their money. Now check this out. While other stores may have occasionally lower prices on their loss leaders, such as Walmart or Target, Costco has permanently capped its margins to ensure that members can justify paying for a membership. That means Costco's products are always cheap. So that means Costco doesn't make that much money on the individual products that it sells, but they don't need to. They're operating at a margin of about 11%, and that isn't very much, meaning for every $100 that Costco spends to buy its products, it's selling them on average for $111. Again, Costco's really smart. The word average is key to that definition. Costco maintains its own brand, Kirkland Signature as we all know them, that earns the retailer a higher profit margin because there are fewer middlemen involved in the production. That means that Costco's 11% profit margin actually isn't quite right for many brand name products. In reality, the brand name products at Costco are sold at a much lower profit margin than the 11% average. But that average is offset by the Kirkland Signature products sold at a higher profit margin. And this is how they're able to keep such low prices for everything. And it only gets better. Regular grocery stores run their businesses on a loss leader strategy. And you're probably very familiar with this business model. So you know how the grocery store sends us a flyer every week to see what's on sale? The goal of the grocery store is to bring you there. So during Thanksgiving, when turkey prices are really cheap, stores are doubling the price of sweet potatoes and cranberry sauce. However, Costco doesn't send out a weekly flyer. They keep their items cheap week after week after week. And if you're from North America and go to Costco, you know this. Their biggest loss leaders are rotisserie chicken, gasoline, and then the hot dog and soda combo. They sold approximately 91 million rotisserie chickens in 2018. They're willing to give up tens of millions of dollars a year on gross margin by keeping the price low. And this just keeps the consumer coming back again every single time. Costco is well known for paying its employees high wages. Okay, how is that good? As illogical as it sounds, Costco's high employee wage are part of its cost-saving plan. With employees earning a decent wage, they are more productive and less likely to quit. And that's very true. The more you're getting paid, the more likely you're going to be doing a good job. And it's so true. Employee turnover is a huge cost of business. Being short-staffed and the associated costs of finding and training new employees can be costly. And if you don't treat your employees well, they're just not going to care and they're going to call in sick every Sunday morning. Costco Today in 2020, they're the third largest global retailer. I actually didn't know this until I pulled this up. Yet their market cap is only $152 billion. Number 1, you have Walmart, 2, Amazon, 3, Costco, 4, a company called Schwarz Group. I've never heard of them before. They're German, yet they're private, so they don't have shares. Walgreens and Home Depot. They currently exist in 12 different countries, with the bulk of them in the States, followed by Canada, Mexico, UK, Japan, Korea. With a 91% renewal rate, showing customers have a lot of faith in the services Costco provides. But take this in, $3.5 billion membership fee income. And that's at 100% margin, meaning it costs them $0 to make that money.
The prophecy is true.
Their sales went up because of the pandemic. Everyone was buying toilet paper. Their gross margins went up. Their membership did go down a little bit this year, though it doesn't really concern me. But look at how much their net income increased and their earnings per share. And like I said earlier, even though the dividend isn't huge, it's still increasing steadily year over year. And Costco isn't just a warehouse, it's an experience. If you're a member or you've ever been to a Costco before, you understand how warming these pictures are. Another reason to love this stock, we're seeing price targets at $400, $435, and although price targets aren't everything, they give us an idea of what the investor sentiment is. And we aren't close to hitting peak Costco. This is a retail stock that isn't hitting on all cylinders. The gas pumps outside of its stores are lonelier than they were a year ago because we're still not driving as much as we used to, and the travel booking centers inside Costco aren't nearly booking as many vacations as they were in the past. And this actually bodes well for shareholders because there's still levers to play in the recovery. Costco only operates in a few countries. It has shown that it can succeed internationally despite cultural differences. This bodes well for its international expansion for many years to come. The more they expand, the more profit they'll make. The more valuable the company is going to become, the more investors are going to like the stock and put their money into it. And to counter the argument that Amazon's just going to replace Costco and everyone's going to just be shopping online since we don't have to go to retail stores, Amazon and Costco are competitors, but there's no significant overlap in member bases between the two. Both Costco and Amazon Prime tend to cater to high-income customers, unlike Walmart, for example. In other words, Amazon and Costco can coexist even as they compete for wallet share. While Amazon continues to put up blockbuster growth, Costco appears to be one of the retailers best insulated from the threat, especially since the majority of its sales come from groceries, a traditional weak spot for Amazon. Costco's membership base and high retention rates act as an economic moat, and its focus on low-margin bulk goods would be essentially impossible for Amazon to replicate entirely through e-commerce. And that's why I'm so bullish on Costco. I think they're such a well-run company with a lot of prospect to grow, and they have the stability to thrive during these times right now. And although I'm not currently a shareholder right now, it's not due to my lack of faith in the stock, it just doesn't fit my goals right now. However, do your own research and see if it fits your goals and your portfolio. Otherwise, thank you very much for watching the video. If you're new to the channel, hit that subscribe button. As always, smash that like button and drop me a comment. Let me know what you think of Costco stock. As well, if you're in Canada and want to start trading with Wealthsimple or Questrade, use my links below and we'll both get free money. See you guys in the next video.